Isn't that what? Am I just contradictory myself? I just said that here's a company. I'm talking about 2000 Amazon.com. It is losing money. I mean, not losing money, growing fast, but cash flow. Well, it's in my PowerPoint slide. I include that. Why? Here's a company losing money but growing fast. So at that time, those days, Jeff Bezos, 52 years old. He and I were same age. Founder of Amazon.com. Guess what he said? Used to say all the TV interview at that time. We don't have any problem cash flow. In fact, we have too much cash. But specifically, he talked about free cash flow. Free cash flow. We'll talk about that towards the end of chapter 17. FCF, free cash flow, right? So this is your section I'm showing. Discussion I'm talking about is right here, just in case you don't know where the PowerPoint resides. Right here. Right here. Cash flow chapter PowerPoint. Lecture notes right here. You just hyperlink here. So you have Microsoft PowerPoint on your computer, then it should opens up. So I did this on Sunday. I'm teaching you 7 days a week. Do you know that? So anyway, so that's that. And this one, I'm gonna. So we're gonna push pencils at the same time. So again, this including solution, full solution, including key account analysis is there, but I didn't include that over here. Right. So that's this one that I'm talking about. The one I just gave to you is this one. So if you click, okay. So I'm just explaining to you. Yes, Andrew.
Did you put that in the online one too?
Oh yes, I did both.
Online class?
Yeah, online class I did that actually on Saturday.
Okay.
So yeah, this might be good to tape that because online students may not know where the location of those two files. So and also I briefly said that how many statements are required by SEC? Who is SEC?
Securities Exchange.
Yeah, thank you. Right, so all those publicly held corporations in the United States under the SEC supervision. You know that, right? Including Toyota, Honda. Why? Because they are trading in New York Stock Exchange. It's not necessarily U.S. corporation, but there's no such a thing. U.S., Russia corporations. It's all global corporation. But as long as you want to trade your stock in New York Stock Exchange, Nasdaq Exchange, you have to follow SEC regulation. SEC. SEC required at least a minimum. How many statements?
4.
4, right? Guess what? Used to be only 3, which is the newest addition.
The
Cash flow statement, 1974. Up to 1974 is only what? Balance sheet, income statement, equity statements are required. All of a sudden, SEC required. That's the newest addition. What do you think is they require that? Because if you think about the out of 4 statement, which statement is most detailed, most storytelling? Cash flow. You've probably seen that by reading that. Cash flow statement is pretty detailed versus income statement. Yeah, you know how much the earnings power the company have. Balance sheet. You know what's the balance of account, ending balances. But how do they do this during the year? So if I were you, if someone tell you, Lisa, you only have one choice out of 4, you cannot say all 4, but you want to get to know the company, which one will be your choice? I want to see cash flow statement. That will be most telling, most informative statement out of 4, right? Even personal lives. If you want to get to know somebody, anybody stalking anybody right now? Anybody is hired by private investigator? What's the private investigator? You know, paparazzi taking pictures backyard. And you want to get to know. What's the easiest, best way to get to know a person is follow cash flow. Where's the cash coming from? where's the cash going out of that particular individual, then you really get to know a person, including personality, of course the job, including his or her habit, how many boyfriend, girlfriend he has, what kind of drink he likes, everything, right? Right, so cash flow, so that's why we think the CPA is closest to their clients more than lawyers and doctors, right? Right, so I have put it here, this is one problem, right? This is the one you have in your hands right now, right? Right here. So it's the same thing. So you have the 2-year balance sheet, year 1, year 2. You have an income statement below, simple income. You have other information. So I just asked that, can you prepare cash flow statement using direct method? I'll talk about that, direct method versus indirect method. By the way, right off the bat, I'll tell you which method, FASB, IFRS. When I say IFRS, am I losing anybody? IFRS, IFRS. International Financial Reporting Standard. You know, I'm gonna be retired, I'm gonna be die soon, but you're gonna be keep on working in accounting field. So no longer US GAAP. I'm talking about in your own working life, it's gonna be one global GAAP, one quality global GAAP. No such a thing, Russian GAAP, Chinese GAAP, US GAAP. It's gonna be really coming soon. So entire accounting textbook will be changed too. So guy like me will be really obsolete, right? So now I have to teach you different GAAP, right? Where's the headquarters? Paris, in France, IFRS. Their headquarters is Paris. Is our country losing the ground? Yeah, we are losing the leadership here. The European take over. They said we cannot trust the US GAAP anymore. You made Enron, remember that? WorldCom, Arthur Andersen. So we totally lost the credibility. So IFRS, International Financial Reporting Standard, that will be not only in your time, it's already 2011. 2011 is this year. Started January, CPA exam. Right, Certified Party Anniversary exam, the CPA exam, remember that? They start asking IFRS, not the US GAAP. So why am I saying that? US GAAP, both US GAAP and IFRS, they will require direct material. Direct material. That's accounting 1C. Direct method of cash flow statement. As you can see the format, it looks like, what's the first word?
Cash.
Directly addressing, that's right. Well, name of statement cash. We're only talking about cash. How many direction cash goes? 2 direction, in and out. I guess 3, stay. Right? But in and out, like pumping the blood out of your heart. Cash, cash, cash. Directly addressing cash. I'm just showing you the format. And here's the indirect method. I'm starting indirect method, starting with net income. Oh my goodness, what net income is sitting there? Net income line item belongs to income statement. Yeah, I did show that. It's a little bit too small. Okay, I did show that at the beginning, right there. Income statement. So indirect method starts with net income. And then you are reconciling, adjusting meaning adding and subtracting to come out with cash inflow, outflow of operating activity. It could be outflow, right? But this example happens to be inflow. So please do not think it's always inflow. Of course, inflow is a better news than outflow, especially operating activity. I'll explain to you in a minute the structure, and then organization of the cash flow, OIF, operating activity, investment activity, financing activity. What does that mean? Those who had my accounting 1A, we already addressed that, but gonna go over that again. But I'm gonna do the conceptual foundation first, so you will understand the cash flow. What's the implication of cash flow? What does the cash flow tell you, right? So adjustment and then investing activity, financing activity, that will be the same between indirect method and so again, the picture skeleton, so to speak, structure of cash flow statement of direct method looks like that. Just get familiar with. What's the first word starting every time? Cash, 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 cash. Right, so it's there, right? But did you notice something here? So if someone asks you, what is the cash flow? Then your answer is, yeah, it shows how much change, how much cash gone out during the year. My goodness, that sounds simple, but how many transactions are we talking about? During the year, it's good sized corporation. Cash in, cash went out. So they ask, okay, cash decreased 1,000. In this case, it decreased 1,000. Yeah, cash account decreased by 1,000. So how much time we're talking about between these two?
1 year.
1 year, 365, 12 months, right? It's a good sized corporation. Okay, so Shita, could you please tell me why your company, this is your company, Dianza company, why cash decreased 1,000? Oh, you want me to tell you every single detail? Yeah. Do you have about 7 hours? You want me to start now? Can you imagine that? I mean, can you say that almost every business transaction, final settlement is in cash? Final settlement. Cash is the one account that almost every account affected by it. Am I right? Can I say that? Accounts payable, accounts receivable. Final settlement is in the form of cash. So we're talking, what, millions journal entry? It's not possible to tell you that. But can you do a little bit summary? Instead of telling every single detail, why cash increase, okay, January 2nd, we received $200. January 3rd, we spent $350. Instead of saying that, can you tell me more in the meaningful summary?
Cash inflow is this much, cash outflow is this much.
Right,
Cash.
well, at least like a categorically. So I just want you to start with conceptual understanding. Start with and. What's the end? Destination, hiking trail, your destination point. What's the destination point? Explain what entire cash flow statement are all about. Explain one number. In this example, the Dianza company, one number. What's the one number? 2001, we started with $2,000 cash. Year later, we ended up $1,000 decrease. Why? We'll find out. So why don't we start with the end? Did I start with the end? Beginning cash balance, 2,000. Ending cash balance, 1,000. Again, this is an example. It doesn't have to be decrease all the time, right? It could increase, right? So it's just an example. So 1,000, the delta, the change, the difference is explained by doing that. Are you understanding the framework? I'm trying to teach you a framework before I get into any nitty-gritty mechanics or components. You have to see the big picture first. So that's a good starting point.